So how far in advance should a buyer start this pre-qualification process if they plan to buy on the island?
That's a tricky question.
Key West Porch Talk, your home navigator. From the keys to the seas, it's all a thrill. With Ruth, your trusted realtor.
Welcome to Key West Porch Talk. I'm Ruth, your Keys to the Seas realtor, and I am a professional real estate agent here in Key West, Florida. LaFreno Real Estate on 1120 Duval if you need to come and see me. We're going to have our chat today with Audrey Green. She is the Senior Loan Officer with Coast2Coast Mortgage, and I'm sure we'll get some great insights. Audrey, would you like to tell us a little bit about yourself?
Absolutely. I've actually lived in Key West for 10 years. I'm originally from Cedar Rapids, Iowa. I have been a mortgage loan broker for 30 years. And
impressive.
Yes, coming from Iowa to the Keys, it was the greatest and the best decision I've made.
I love it. That's great. Good to have some questions to ask you, and we can share the answers with our viewers. So
perfect.
Dig in. What's the biggest difference between getting approved to buy a home in the Keys versus the mainland, if there is one?
So I feel the biggest difference when I moved from Iowa down here to the Keys was insurances. I mean, the insurance, you have wind, flood, and hazard insurance, and I think that is quite a shocker to a lot of my buyers.
Right, and it's a little more expensive here,
it is.
Too.
And the taxes and the insurances are the shockers.
So we just have to prepare the buyers for that.
I would recommend actually asking the listing agent if the seller currently has insurances, what those quotes are, letting them know what the taxes are, which you do really good at that anyways.
Thank you.
You're welcome.
We're a team.
We are.
Great. So if a seller wants a smooth transaction, which we all do, what financing details should they ask a buyer's agent to confirm up front about the buyer?
I think getting pre-qualified is the biggest hiccup that I think people say, well, I want to go house shopping, but I don't know what I'm approved for, but they believe in their head, this is what I'm approved for, do their own numbers, and it does not work like that in the Keys.
So what would you explain the difference between pre-qualified and pre-approved? Because I think the buyers are
That's a great question
on that.
I agree. So pre-qualification would be for me to look at all the tax returns or 12-month bank statements or whatever loan product fits the buyer's needs. That's a pre-qualification, me pulling credit, social security numbers, date of birth, 2-year residential history, 2-year job history. In some cases, I mean, again, financing is creative. And then when you get pre-approved, that's you actually having a purchase contract in hand or me submitting it to the bank. And then the bank looking over your information and saying, okay, we're going to do this loan. However, I need appraisal, title work. There's a list of items that we go back and forth with the underwriters with during the loan process as well. But that's the first initial pre-approval.
Right. So if I'm taking a buyer out today, then I should get them pre-qualified or pre-approved?
Pre-qualified.
Okay.
Pre-qualified. Yes.
Yeah. So they don't know what home they want yet.
No, exactly.
Right.
Yep.
Very good. Well, that's going to help a lot of agents out there and a lot of buyers understand the process.
Yes.
Yeah. Mm-hmm. Appreciate that. And for a smooth transaction.
Yes.
So how far in advance should a buyer start this pre-qualification process if they plan to buy on the island?
That's a tricky question. I would say as long as they have their down payment funds set up and they're ready to go look at properties, I would say that would be the time that you would get pre-qualified. And the reason for that is, if our buyers are out with you as a realtor and they find something they like and there's multiple offers sitting on the table, now they have to wait. I mean, not everybody is able to fill out the online application right away. Not everybody has their tax returns on hand. They might be vacationing or have something to do with the family later on in the evening. So it's just better to put the cart before, or put the horse before the cart.
Well, yeah. And that's a good point that you mentioned. So there's a possibly misconceived standard golden rule that 20% down is the only down payment available. But Could you elaborate on that?
I'm so happy you're bringing this up. I've actually spoke to a few of my buyers recently that felt that, well, I'm not ready yet because I don't have 20% down. You don't need 20% down. We have VA loans are 100% financing. We have 3% down, 3.5% down, 5% down, 10% down. I mean, again, and just knowing where it is that how much you want to put down also makes a difference on your payment, but don't think that you need 20% down to purchase a property here in the Keys.
And the down payment, is that related at all to the individual buyer's credit history, where their credit standing is?
That's a tricky question too. Credit always has, you always have to have a minimum credit score with whether it's FHA, VA. I mean, obviously, I would say a 560 and above is going to get you 3.5%.
Oh, that's good.
If you get into jumbo financing, that would be for more of a conventional conforming loan. If you go into the jumbo prices, then you're going to be required to at least have a 680.
So now you mentioned jumbo and conforming. Let's explain a little bit about those terms to our viewers, because I'm sure there's some viewers out there that aren't familiar with those terms.
Yes. So our conforming loans goes up to around 800,000, and then your jumbos is anything over that. So jumbo loans are a little bit different than what conforming is, because when you get into the jumbo market, you are going to have 20% down on a jumbo. You do have the option to have a 10% down on a jumbo. However, the interest rates and the private mortgage insurance premium, which is anything that's over 80% of your property value, that can be quite high on a $1.2 million property.
Correct. Right. So good. All these are good terms and good options for a wide variety of buyers.
Absolutely.
Excellent. Yep. Great. So we did mention insurance a little bit earlier on in our conversation. So with the flood zones here in Key West, the majority of them in AE in a flood zone, how is that influencing the loan approvals right now? Are we having any challenges?
I don't really think so. I believe as an originator and also you as a realtor, I mean, I think we're pretty informing to our buyers and let them know up front. And it's usually on the forms, what the taxes, what the insurances are. So I don't really feel like it's, obviously it's going to make a difference on a loan approval. If you have debt ratios are 45%, the debt ratios are the money you have coming in versus going out. It's going to make a difference when it comes to that, which also affects the rate. So in that, there's a lot of moving parts.
Yeah. So really, I think people are afraid, well, you can't get insurance in the Keys because of storms, but that's not true. I mean, it's just that the costs have gone up with insurance, but you're still
correct,
including that in the loan, as long as the buyer has the funds to pay for the insurance and the taxes.
Correct.
It's not going to hinder the loan.
No.
Okay, perfect.
Yes.
Excellent.
You do have to have the insurance, 4-point inspections. I would, get the wind mitigation 4-point inspection, so you know exactly. We can send it to the insurance agents and leave it to the professionals.
And let's reiterate again, what is the 4-point inspection?
4-point inspection is actually when an inspector comes to the property and makes sure that how the roof is clipped on, to the home, or if you have storm windows in, they check your electrical, plumbing. They just kind of give a full inside view of the property.
Excellent. Great. And that will help with the insurance costs.
Yes, it
Excellent.
does. The storm windows, shutters, roofs, yes, all of that makes a different siding.
And so that's always good too for the buyer to know ahead of time that these things will help with their insurance. So when they're home shopping, they can potentially look for homes that have more of these updated insurance points on them.
Yep.
Perfect. Yep. Excellent. So it all goes together to get the loan.
It does. Yes.
Yep. So what's your best advice if someone's selling a home who wants to attract buyers? This would be the seller with the strongest financing profiles. So if I have a listing and I'm like, Audrey, I've got, I want to help this seller figure out how to get their home sold fast. Is there any incentives that we can offer a buyer?
Some of our buyers right now, depending again on the price range, but are conforming loans more so. And especially families down here in the Keys that work 2-3 jobs, are locals. Sometimes I think, to offer sellers to pay for some of their financing, 1% or 2% of their closing costs, or their down payment, or,
sure.
I think that's great.
Yeah,
You
so
know.
a family coming in, getting a conventional loan
Mhm.
on a home, maybe under $1 million.
Yeah.
The seller could easily offer an incentive to help that buyer's closing costs.
Absolutely.
Oh,
Yep.
excellent. Good to
Yeah.
know. I
Yep.
don't think a lot of buyers understand that, or sellers. You know that
Mhm.
to get your home sold, you may have to do some
Seller financing.
yes,
Yeah. Well, yeah.
or some negotiating around.
Yeah. Seller concessions.
Yeah,
Yeah.
exactly.
Yep.
And then, so the buyers today, do you believe that they're prioritizing their monthly payment comfort or their long-term investment value?
So I think the two of those, that's another good question. I think the two of them kind of go hand in hand.
Uh-huh.
I mean, none of us really want to invest money in something that isn't going to give us something back.
Right.
And then we also want to pay attention to what our monthly outgo is too, and make sure that it's affordable and we still have time. We don't have to eat ramen noodles
or peanut butter out the
or
jar.
peanut butter and jelly.
that brings me back to the point that you mentioned about the monthly payment debt to ratio.
Yes.
Could you explain that a little more, how that affects what their payment's going to be, or if they're going to get accepted for a loan?
Debt to income ratios, we really don't like over 50%, unless it's a VA loan.
Meaning that they have 50% debt, 50% income going out.
Right. And again, when we analyze income, it goes by the gross income.
Mm-hmm.
Although, again, we do have for people who are self-employed, we have great products for that for them as well, where we can do 12-month bank statement and just add all the deposits that are in the account over the last 12 months. For investors out there, we have a DSCR loan that doesn't require any income documents at all. So there's a lot of moving parts when it comes to that.
Right.
So the debt to income ratio, yes, it does matter. But again, there's a lot of creative financing that can be done for
and you're the
our
person
buyers
to
as
go
well.
to because
Yes.
you're familiar with all of these different types of loans so that you don't have to pigeonhole a buyer into just one type.
Yes.
And with all your 30 years experience, I know that you have probably seen a lot of creative loans out there.
Yes, I have very many.
Yes. That's great. So currently, there's a lot of talk in the media, social media, news, all of that about the interest rate. What kind of trends should sellers and buyers watch for as we move into 2026?
So this has been a very volatile market. And years ago, I'd be able to say, okay, well, this is what rates are going to do. However, a lot of times I feel like rates would be where they were at 3 months ago. So in this market, I just think it's volatile. A lot of the buyers right now, or even some of my refinances, well, I just want to wait because the market's going to go down. Well, 6 months ago, it still really hasn't moved quite that well. Recently they started coming down a little bit. But I think when it comes to buying, I mean, once those rates drop, the prices are going to go up.
Right.
So what's important to you? I mean, you can always go in and refinance later,
right?
But I would prefer to pay less for a home at a higher rate than pay more for a house with a lower rate.
Yeah.
I mean, it's kind of, you got to figure out what's in your best interest.
Sure. What is the average rate right now on like a regular 30-year?
Today's rate, I actually locked one this morning at 5.5%.
That's
on
great.
Conforming, yeah.
Nice.
Yeah, and so
and that's why people shouldn't wait. If they're ready to go, they should lock something in because tomorrow it might be something different. Maybe yesterday it was higher.
Yeah. And I mean, again, interest rates are also driven by your credit score, your debt to income ratio. I mean, there's moving parts with that as well. So all of that triggers what our interest rates are going to be.
You move a lot of parts every day.
I do. Constantly juggling.
That's great, though. You're the type of lender that we want our clients to work with because you do look at them as an individual and all of the different aspects of their life and their money and their input,
their goals,
where it's going, what their goals are. Yeah,
yes.
Exactly.
I mean, 30 years ago when I got into this business, I didn't realize how much it would be more of a passion than it is a career. People say, I want to retire. I'm like, I don't think I ever will. Right. I love what I do.
Yeah. Helping people, fulfill their dreams. Isn't that what we do?
Yes, absolutely. We get the keys to some of their dreams, right? In the keys.
That's right.
But no, yes. I mean, a home is the most important asset to people too, whether it's a second home, an investment property, it's something they can pass down to their kids or
It builds
it
wealth.
builds wealth and equity or residual income later on down the road. So
Sure.
yeah.
Absolutely. Very good. Very good advice.
Yeah. Thanks.
Yeah. So now I would like to do our truth or tale round. So
Okay.
I'm going to ask you questions. They're just going to be wide open questions, and you can tell me if it's a truth or a tale.
Okay.
To the belief
As long
of
as it's
it.
not a truth or dare, we're good.
That's good. So anyway, a buyer's credit score matters less than their offer price.
False.
We touched on that a little bit, didn't we?
Yes.
In our conversation.
Yes. Yeah. Yeah.
That's right. So local lenders approve faster because they know the island.
I do agree with that. That is a true statement.
Ding, ding, ding.
Yes. And especially here in the Keys because
Yeah.
it's such a unique area.
Yeah. Well, as you mentioned, with the insurance costs and tax
Yes.
costs, all of that is
Yeah.
potentially higher than it was where you came from.
Exactly.
Yeah.
I mean,
Yeah.
I had a buyer that ended up on my desk, and I'd spoke to them, but they were comfortable with their local lender. Well, they didn't. Again, there's a lot of dynamics to Key West.
A local lender out of state?
Local lender out of state. Yes, their local lender out of state.
Right.
Correct. And they ended up back on my desk in a frenzy. I got it closed in 10 days, but it was, good for me. But just stay with the locals. Locals know what we
Because
are
you
doing
know the
down-
area.
We know the
what
area.
the
We
insurance
know the
costs
people.
are.
The recommendations, for insurances, the inspectors that come into your home, plumbers, construction people, whatever. It's more than just the loan itself. It's the networking and the community that we have here too.
Yeah, because
So.
you're able to pick up the phone and call that inspector and ask them about the
Mhm.
inspection.
Yes,
Yeah.
and the thing I always tell my clients, I say, listen, even after your loan is closed, if there's a question or if something comes up or you need somebody to replace siding or do windows, call me. I can be that referral girl, or you receive something in the mail. I'm always here. I'm a phone call away.
And that's great.
Yeah.
That's awesome. So a 4-point inspection, speaking of inspections, is required by lenders before closing.
It is not. Well, that's tricky too. Actually, sometimes it is. It depends on. We do need the wind mitigation after it's expired. So we need to look and see. That's one of the first things that we should do once we have an offer accepted is to see if the sellers do have a recent wind mitigation. The 4-point inspection also helps for insurances. It's not required, but I would recommend it.
Okay, good.
Yeah.
Excellent. So cash offers always close faster than financed ones.
Sometimes I can close loans in 10 days. I mean, it just depends on how the buyer is together. Yes, the cash usually closes faster, but I've closed a lot of loans if people have, get me the items needed up front.
If they give you all the documents,
and when I ask for something,
yeah.
have it to me within a few hours. I mean, the process can move pretty quickly as well.
So that's a misconception.
Yes.
All right. Let's see. So financing falls through most often because of the inspections.
No, that's false. That is false. Yeah. That is no.
So how does the inspection, besides the 4-point inspection and the insurance, how does that even affect your lending situation?
No, it affects the insurance. So
Yeah.
That's how it affects my debt to income ratios. Right. But no, I don't look at those. I mean, if people want me to go over them with them, I do know how to read them. I'm more than happy to do so. But no, it's not required. I don't send it to the banks that I use. I don't do any of that.
Right. More than not. The inspection is more for the buyer's peace of mind.
Correct.
Unless there's a roof. If they identify a roof is outdated, then
Yes.
possibly that would affect insurance, which could affect the loan.
Correct.
Is that right? Okay.
Yes. Well, yes.
Yeah.
Well, if the appraiser comes in there and says this roof, it needs to be replaced, the appraiser is what more is on the lending side. It's what
We haven't even talked about the appraiser.
I know. Here I go.
Okay.
No, the appraiser is what, when I look at that appraisal, which an appraisal is when a company actually goes out to the home and makes sure that the value is there. If for some reason on a purchase, the purchase price is, let's say, I don't know, $700,000 and it comes in for $650, at that point,
that's going to change the loan
going to change
situation.
the loan. It's going to change the loan. Or if that appraisal comes in and says, there's no flooring in this room, or, the drywall isn't completed. It's only studs. I mean, things like that either have to be repaired, or again, there's a loan option for that, to help the buyer. So we might have to switch a loan product, which then may extend our closing.
Got it.
Yeah.
But there is the opportunity to switch loan products to make the deal still go through.
Correct.
Excellent.
Absolutely.
Excellent.
Yeah.
Great.
Yeah.
Lots of tools for the buyers out there and the sellers.
Oh, yeah.
Yeah. Very good.
Mhm.
Excellent. Do you have any other closing remarks? That's all the questions I had for today.
No, but Ia, you are an amazing realtor, and I love working with you.
Aw. Well, you're
And
great
I
too.
appreciate the opportunity.
Thank you.
And thanks for having me here.
Let's get some
Yeah.
of those buyers closed.
Yes.
Okay. Thank you, everyone, for listening to Key West Porch Talk. This is Ia Ruth with Keys to the Seas with Lafreno Real Estate. And thank you again, Audrey Green with Coast to Coast Mortgage. It was a delight to have you on my show.
Thank you.